Zomato is one of the first consumer internet companies which got listed in India. This has given confidence to several startups, tech startups, product companies. We can also do IPO in India. IPO means what? Part of the equity you are giving away. Somebody has to buy those shares. Who should go for an IPO? It's a very, very important thing. I mean, broadly, there are two kinds of companies who can go for an IPO from a suitability perspective. If you observe, a lot of defense stocks are doing extremely well. People should feel it is an institution. It is not an individual. Zomato also has a huge moat. Can we create somebody in next 1 year, 2 years? Even if you put capital, you cannot create that.
What was so different about the Zepto brothers that it scaled this fast and the other companies were not able to do it? So, Raghu sir, first of all, thanks a lot for doing this.
Right.
Usually, I feel right now Hyderabad is like a aspirational capital because until now, founders that we have seen, the businessmen from the Gujarat, and you have seen a lot about Bangalore in regards to startups. But right now, Hyderabad, a lot of startups are coming up, and you've been a part of this ecosystem for more than 30 years. And something that is aspirational to any founder is the way they can grow and be a part of that India's growth journey.
Correct.
And I personally got to know about the topic that we are going to discuss today, or the main objective is to understand about the IPO as a subject.
Okay.
To the founders, how they can build a startup
Right.
with an aspiration to become an IPO
Right.
or to list themselves.
Right.
And I got to know about the IPO, or else my aspiration to know more about it started in the time of after COVID.
Right.
When Zomato listed itself, it was a loss-making company.
Correct.
It listed, and
Yeah.
then you can see the success like acquiring Blinkit and all these things.
Right.
And what I would like to know about is, especially if you look at the case study of Zomato,
Right.
do you think it was that success journey very well covered? And if it did not go to IPO, would it be the same thing?
Yeah. See, Zomato, what we need to see is Zomato IPO on the listing. This is one of the new generation companies getting listed. In the Indian capital markets and IPO journey, pre-Zomato and post-Zomato. Why? Right? What is Zomato? It is an internet company, consumer internet company.
Okay.
Right? Now, if you take Flipkart, Zomato, or Nykaa, Policy Bazaar, all these are called as consumer internet companies. By use of internet, they are doing the commerce with the consumers, individual consumers. They have millions of customers. Now, Zomato is one of the first companies, consumer internet companies. We have raised large money, private capital, VC capital, private capital, which got listed in India. Prior to Zomato, it was unheard of. Mostly the Indian capital markets, when we see listing on the Bombay Stock Exchange or the National Stock Exchange, most of the companies were profit driven. They were all having the profits. When you value the company, it depends upon how many times of the profit can the company be valued. Say, let us assume the company value is say 10 crores. Now, generally people say it is 20 times of your profit is the value of the company. 30 times of the profits value of the company. So 10 crore become 300 crore market cap in the listed space. Now this particular company, with the losses, they went for an IPO. The regulators, investors, general public, everybody had an apprehension. Prior to this, all the technology companies, product companies, they were going to the other markets, particularly the NASDAQ.
Okay.
But this has changed, that even in India, loss-making companies, platform companies, consumer tech companies, product companies, can go for IPO in India.
Okay.
So that way, this has given confidence to several startups, tech startups, product companies. We can also do IPO in India. That's a big change. That's a very, very historical movement for the Indian capital markets, Indian government, startup founders, private equity investors.
Got it.
When the private equity investor invests, right, what he looks for, obviously when he's making an investment, he needs to get an exit.
Yeah.
He's mobilizing money from various investors and putting money into several companies. So they need an exit.
Yeah.
They can't lock their money forever. Generally, they'll be there for 5 to 7 years. Their exit strategies are twofold. one, you go for an IPO, and that's where the investors can exit. The PE investors and VC investors can exit. The other investors can come in. This is one exit route. The second exit route is strategic sale. You're building a technology company. Say Google will come and acquire. So the investors will get the money. So therefore, that's what the way we need to look at capital market post Zomato era, pre Zomato era.
Okay, got it. And sir, I understand that there is a different route a founder chooses for their own company and also an investor chooses.
Right.
And it would be very wrong to just assume that everyone would know about IPO, because I honestly, on a surface level, I get an idea of it.
Right.
But I would like to know, first of all, what is IPO?
Right.
If you have to explain it in a more simpler terms.
Right. IPO, just to expand the, this word, initial public offering, right? Initial public offering, means this is an IPO. What does it mean? The founder or the company giving away part of the ownership.
Okay.
Part of the ownership to the large public.
Okay.
It is not private. Right?
Okay.
Large public shareholders, there may be 1,000, 2,000, 5,000 people coming and participating in your ownership.
Okay.
So that is what, at a conceptual level, giving away ownership in your company to a large number of public shareholders is an IPO.
Okay.
Right? So why do the companies do IPO? Right? Companies do business. Right?
Yeah.
They need a growth capital.
Got it.
One of the reasons is they need a growth capital. As they keep growing, they will require more and more capital.
Okay.
Capital comes in the form of a equity, capital comes in the form of a debt. But every rupee of debt you raise, you also need an equity.
Got it.
If you are listed, your ability to raise more capital increases.
Okay.
So that is why companies go for an IPO.
Got it.
Now in India, the IPO trend, started with we call the Reliance IPO. Maybe it is 40 years back. That is where the large number of small shareholders, small investors came into the market.
Okay.
That is how the market started growing.
Okay.
The IPO market, capital market, small investors investing into the IPO companies.
Okay. Is it like when you told Reliance, sir, I even remember, I actually, now that I recall, I was watching this movie called Guru,
Right.
in where I also seen how Dhirubhai Ambani comes to a place where he feels that to grow his company, he needs to take money from the public.
Correct.
And isn't it scary even for founders when they go for an IPO? Obviously, decision making becomes a bit more rigid.
Right.
They become a part of this curriculum.
Correct.
So, can the company still innovate in the same aspect that they were doing before?
Yeah. So, who should go for an IPO, right? What kind of company should go for an IPO is a very, very important thing, right?
Yeah.
As I said, you are giving away part of the ownership to public shareholders. You are accountable. You are responsible for their money. You as a founder or a MD or a CEO, you are a trustee for their money.
Yeah.
You will be under greater scrutiny, right? Now, broadly, company which is listed, company which is privately held. Privately held could be only the family members, maybe friends and family, or the VC and PE investors, all privately held. You may have 10 people, you may have 20 people, you may have 50 people, but it is a privately held.
Got it. So, sir, as we were talking, right, it would be very good if we understand what kind of companies are suitable or else are favorable to go to an IPO at this point of time.
Right. Broadly, there are two kinds of companies who can go for an IPO from a suitability perspective. As I said, there's a lot of accountability in the listed companies, publicly listed companies, for the founders and the senior management.
Okay.
Right? They should be prepared for a higher amount of transparency, higher amount of, the accountability. Like a politician.
Got it.
A politician who got elected for his constituency is accountable for them.
Yeah.
Is responsible for them. They can come and question, why something is happening, why something is not happening. Similar way, for a listed company, founders and management, that is what they need to think, right? Now, from an attributes perspective, right? What kind of companies will be liked by the investors? IPO means what? Part of the equity you are giving away. Somebody has to buy those shares
Yeah.
at that particular value. right? There has to be interest, enough interest. They have to believe in the story of the company. How the story gets built, what kind of stories gets invested in. Very, very important thing is the quality of the founders and the management.
Okay.
High quality management and the founders.
Okay.
That is one.
Can you double tap on that, sir? How can an investor or even public decide that particular founder is high quality?
Right. Now, there are various ways and means to demonstrate this, right? Now, let us assume you are a serial entrepreneur,
Okay.
right? And you have built a company, you have scaled it to particular level, maybe you had a great exit, right? That is one. Second, you have the senior management. Maybe you have the CEO, COO, CXO, CMOs, the C-level guys who have a demonstrated performance.
Got it.
Somebody part of a large company, they have seen the growth, they have delivered the performance, right? They are joining here, right? And sometimes, if you are coming from a good background, good pedigree in terms of somebody worked for a large company and then starting on his own, or somebody is coming from a good business school, or good, maybe engineering background, right? I mean, this is what you can look at the quality of the management.
Got it.
This is very, very important. The second most important, the business model. What kind of business are you in, right? The quality of business. Is it a commodity kind of a market? Is it a innovative product? What is the competitive advantage you have versus the other players,
Okay.
right? If there are 100 restaurant chains, but why should I invest in you? Maybe this restaurant chain has a complete difference in terms of their cuisine, the loyalty program, maybe the quality, the turnaround time, the experience,
Got it.
right? So that differentiation in the model is required. That can come in multiple ways. Your product itself, like take an example of Apple.
Okay.
It's an aspirational.
Yeah.
It's a huge, brand. There is no competition to them.
Yeah.
Do you have something like that?
Okay.
Or do you have very, very large player, things very, very efficiently. Your margins are high. Right?
Got it.
So that business model is the second very, very important thing. What kind of business I am in? How am I different versus the competition?
Okay.
And I also should be able to show that next foreseeable future, 3 years, 5 years, 7 years, there is a growth available in this industry.
Okay.
This industry will grow 30%, 40%, 50%. If you take last 2 to 3 years, what has been happening? If you observe, lot of defense stocks are doing extremely well.
Okay.
These companies are providing, defense manufacturing, defense services to the defense companies in India and overseas for last 20, 30 years. But after this, Modi government came for last 10 years, they give lot of push to the Indian domestic defense sector,
Okay.
right? Now they have become very, very profitable. There is a growth, and India is spending a lot of money on the defense equipment, arms and ammunition. So people believed that this sector will do very well. They started doing very well. Last few years, we also have IPOs from the defense sector, which started delivering very well. You understand, right? Now,
Got it.
So why people are investing? Because they see growth.
Okay. Got it. So the government interest is also aligned with the promoter's interest, so the growth will automatically happen.
Correct.
Got it.
Now the companies which were doing, say, 100 crore turnover, and suddenly in 2-3 years they have become 500 crore turnover.
Okay.
That is the kind of a growth
Okay.
that investors will be able to understand, ask those questions.
Okay.
They have to get convinced that there is a growth potential.
Got it. And sir, so if a person is building a company or a startup right now, them focusing on these industries where the nation, the government is also interested in, will have more success from an investor standpoint than just coming up with with a company or a startup for their own personal interest. Will this be right?
Not necessarily. See, fundamentally as a founder, you need to have a conviction. You should do your own, Study that what sector I want to get in. I want to get in a particular sector because I have the domain knowledge.
Got it. Hmm.
Just because government is spending a lot of money, I cannot get into that business. One, sometimes there are entry barriers. Second, I don't have enough domain knowledge or capability to deliver that.
Got it. Hmm.
But where particularly the central government projects, if you take solar, if you take EPC, if you take roads, all the infrastructure related businesses are doing very well because central government started spending a lot of money.
Okay.
Defense, ports, airways, roads, solar, these sectors are doing very well.
Got it.
Yeah.
Got it. And sir, now we have covered, I understand the three aspects that is suitable.
Right.
But there is also a place where we should know for a fact that what are not suitable for IPO, not ready. Let's call them more like startups which are not ready yet for an IPO.
Yeah. So, I mean, just let me go back to the same question. We looked at the quality of the founders and management.
Yeah.
Second is the business model.
Yeah.
The business they are in. As I said, there has to be a growth potential and it should deliver profits.
Got it.
Very, very few companies with losses can go for an IPO.
Okay.
Somebody has an IP, but everybody believes that this IP is so powerful, though they are not making money today, but 2-3 years from now they'll make money.
Okay.
If that is an exception, but otherwise, generally for an IPO, you should be a profitable company.
Got it.
There is a growth, right? Besides these two, there are few other building blocks, right? As I said, companies are privately owned, publicly owned. When you are going for an IPO, it means you are publicly owned.
Yeah.
Now, the way you operate your business, completely different. Completely different. It is among few investors and few family members versus, you are out entirely.
Yeah.
You are under scrutiny on a daily basis.
Got it.
Your performance, you have to give a performance every quarter, right? And once you go for an IPO, your share is listed on the stock exchange.
Yeah.
That gets traded every day.
Yeah.
Every day means everybody is judging your company performance on a daily basis. For this to become a public listed company, right? As I said, right, there are people should feel it is an institution. It is not an individual.
Got it.
There is a proper organization structure, and there is a lot of transparency required in the information, and there is a lot of accountability, right? You have the financial statements, your business plan, your borrowings. Sometimes people do transactions with the related party. I have one listed entity, one private entity. When I do transactions with my own private entity where promoter has interest, people don't like it.
Got it.
Because you may do transactions which are favorable to the private entity versus the public entity.
Got it.
I mean, this we can talk a little more maybe in the coming sessions, but this is how the features or attributes of a company which you want to go for an IPO.
Got it. Okay. So which means in an organization itself, they should create a culture and a governance
Yes.
where they are ready for this transparency and growth.
Absolutely. This is very, very important. A lot of companies, without thinking through, without having that mindset, without changing themselves, went for an IPO, but they could not sustain.
Okay.
They could not sustain. Markets will punish you very, very quickly if I don't like it.
Okay.
You may be doing great performance, but as in a management, the reliance on management, quality of management is not that great. Market will punish you.
Okay. So will this companies be, if I have to group it, will they be in more of an aspect that they're way too early to an IPO?
No, it is not it is not whether they are early or late, but it is a mindset. There are for certain fundamental things, the company should be ready.
Okay.
While fundamentally I have a great business model, but great founding team, great management team, but culturally and thinking wise, I have not changed so much.
Okay.
Therefore, I will not be liked.
Got it. Okay.
You are making a lot of money, but I don't like that company.
Okay.
Their transparency levels are poor, right? Their management is not that great. I don't see sustainable growth.
Okay.
Today they are making money, but I'm not sure whether they can sustain this. I'm not trusting the quality of the management.
Okay. Got it. So it at the end of the day, it really depends on the mindset of the founder and how much they are ready to be open and transparent.
Absolutely. This is very, 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 very important.
Got it, sir. And how much, for example, even the company is going for an IPO, sir, there has to be a sense of the process will take time, and also how much valuation or else how much they have to even, because at the end of the day, you're giving a price tag on something that you have built very close to you.
Right.
So how does that happen, sir? How do they keep a price on themselves? How does that valuation things work out?
Yeah. No, these, there are a lot of methods to value
Yeah.
a company, right? I mean, before just answering this question, let me answer particularly what kind of companies can go for an IPO,
Yeah,
right?
for
I mean,
sure.
there are broadly, businesses are done
Yeah.
in three types,
Yeah.
right? Startups with high growth, high growth potential,
Got
who
it.
have raised money, one
Got it.
category. Second category, legacy businesses, and very, very established, very matured. They see a lot of potential. Family businesses
Got
who are becoming bigger and bigger. Second category. The third category, I call them as more of a lifestyle businesses, which will never go to IPO, which cannot go for an IPO.
Got
The
it.
founder, has a limitation. He does decent amount of business at particular scale. He makes money on a yearly basis, but those are not very scalable. If there is no scale, no growth, they cannot go.
Got
So
it.
the third category cannot go. The first two categories, the startups. When we say startup, it's high growth.
Okay.
That is given. High growth companies who have already raised capital, they can go for an IPO.
Got it.
The second category, I mean, if you take first category, Zomato, Nykaa, Policy Bazaar, all of them come in the first category.
Got it.
There are several startups getting listed in last 2-3 years. Second category, as I said, legacy or a family businesses going for an IPO. The example could be several pharma companies we have seen, several infra companies we have seen, several solar companies we have seen. They have been running the business for 20-30 years.
Got it.
Second generation has come in. Our first generation has an aspiration. They are doing business in one state, but I have to go to 10 states. Right? I am doing in one product. I need to add 10 more products.
Got it.
Right? Several, old economy businesses getting into the market. So different defense companies who have been into manufacturing, all of that. These are the two kind of companies can go for an
Got it.
IPO.
Got it, sir.
Yeah. Yeah, your other question?
Yeah. My question was when a family owned business goes for an IPO,
Right.
they must have already created a structure in them about how they want to operate.
Correct.
And it has generationally passed.
Right.
And what kind of main challenges do they face when this family owned business go on an IPO, sir? Like, is it in the more in terms of founders, or else is it more in terms of culture and the process set?
Yeah. These are multiple things. If a family owned, closely held company need to go for an IPO, this journey could be anything 12 to 24 months.
Okay.
Lot of preparation is required in terms of the organization structure, governance mechanism. Lot of preparation is required. When you are a privately held, your compliance and governance is very, very limited. I don't need an independent director. I don't need a very reputed audit firm doing my books.
Got it.
Right, wife and husband can be directors and run the business. But when you go to the IPO, there are certain regulations. Our regulator, SEBI, came out with several regulators.
Got it.
Several regulations. Couple of them there are eligibility conditions
Got it.
in terms of what should be the capital, what should be the profit, and only then how much money you can raise, what valuation you can raise. So the thing is, management structure is important, governance structure is important for you to, and the culture is important.
Got it.
Just to give you one example, you are getting the books audited every year and file it with the register of companies and to the income tax department.
Got it.
For a March 25, generally March you need to do by September. For a March financials, you have 6 months time to file with the ROC, register of companies, and the income tax department.
Got it.
But once you are listed, you have to give results every quarter.
Okay.
Every quarterly results have to be given within 30 days, within 45 days. If your system is not geared up, you will not be able to deliver.
Got it.
This is one example. Second, you need to have an independent directors. Generally on the board, all the family members are there, or maybe internal senior management is part of the board. Given now you are taking money from the public shareholders, right? The board has a fiduciary role, fiduciary responsibility. Everybody who are there, they have bias, they have their own interest. Promoter wanted to make more profit, maybe more remuneration, but who does take care of the interest of these public shareholders?
Got it.
There is a concept called independent directors.
Okay.
See, they have limited financial interest in the company. Their interest is to safeguard the every stakeholder interest.
Got it.
Public shareholder, regulator, all those kind of a thing, customer. So you have to put the independent directors on the board. And the remuneration of directors, remuneration of key managerial personnel is decided by the independent directors.
Got it.
So you are running your own company, private limited, family owned for last 20 years. Suddenly you want to go to public, you are taking the remuneration. You decide that moment and take the remuneration.
Okay.
But once you become a public, your remuneration has to be approved by the independent director.
Okay.
I own 80%, I own 75%, right? And I am running the company, I am making the profit. But somebody independent director who came on board 3 months back, he is going to judge my performance, he is going to decide my remuneration.
Yeah.
There are egos, there are emotions, whether I can be open for that kind of a transition as a founder. These things do take time.
Okay, got it, sir. So I feel there is a very huge even founder readiness has to be there for a person to get into the IPO.
Absolutely. Founder conviction is a transformation. Very, very important.
Got it. And sir, I mean, obviously this is the major doubt I have, that is in regards to understand the lifestyle business.
Right.
So what exactly is this lifestyle business and what exactly is the kind of founder mindset that is involved in this particular industry?
You mean lifestyle business?
Yeah, I mean, you told the lifestyle industry or business is not suitable for an IPO, right?
Yeah.
Because that is a very huge doubt that I have, because a lifestyle normally means for me is a fashion or a beauty product. But I guess I'm wrong there.
Yeah. No. I mean, I think when the business are compartmentalized growth and fundable, IPO, all of that, there is one category called lifestyle business. What does it mean is the growth is limited to the founder's ability. You don't want to grow beyond a point.
Okay.
Let's take a services firm, IT services firm, right? I am doing business for last 20 years. I have customers from multiple geographies. I am doing say 4-5 million revenue. I have 300 people. I am very happy as a founder.
Got it.
But I don't want to go to 3,000 people. I don't want to go to 20 million revenue. At this level, I am trying to contain my growth. It's lifestyle business for me.
Got it.
So you are not going after growth. You have a contentment. You are happy with the way what you are doing.
Got it.
I am a pharma company. I am very happy about the way I am doing business. I don't want to, put me under pressure and all of that. So, I mean, I hope you understood, right?
Now I understood. It more than the name, I have to understand the mindset of that particular founder and also the fact that how much they want to grow.
Perfect.
Because at the end of the day, if you really want to create a sense of impact that a Reliance or a Tata wants to create, you can't do it with just individual capital. You need to go public, you need to raise funds, and you need to grow rapidly.
Yeah.
Got it.
People who want to go for an IPO, they need that kind of an aspiration.
Got it.
Aspiration to grow. Potential to grow. That is what is important.
And do you feel, sir, are there any particular industries that I mean, you have been in this ecosystem for a while. Are there particular industries that are actually your favorite, or else you would say if those industries founders should aim for an IPO to foster their growth even much bigger? Are there any companies or industries like that?
See, I mean, each industry requires different kind of a capital.
Okay.
And also, what worked 5 years back won't work today.
Okay.
Today, with the several technological changes, Trump, immigration, tariffs, and the technology, AI and all that, the life cycles for a business are getting shrinked.
Okay.
Right? Now, what did not exist, right? Now, in 3 years are becoming billion-dollar businesses.
Got it.
We can't say, we can't say, this business is forever. We used to have something like that.
Got it.
Once I build it, I think I can continue to grow all of that. But today the disruptions are happening, and even the established businesses have to be on their toes to survive and grow.
Got it.
But current theme could be uh, particularly the AI driven businesses.
Okay.
Right now people are doing a manufacturing, but they are able to bring a robotic manufacturing,
Okay.
scale, efficiency,
Hmm.
right? Or the platform kind of businesses. There are very, very few businesses which have a kind of a monopoly.
Okay.
IRCTC.
Hmm.
If you want to buy a ticket, you just have to go to IRCTC.
Yeah.
I mean, very, very few like that. IRCTC is one. Like there are a couple of market players called CDSL, a depository participant, right? Bombay Stock Exchange itself is a listed.
Okay.
There can be only two. I mean, there are only two stock exchanges: Bombay Stock Exchange and National Stock Exchange.
Hmm.
BSE is listed,
Got it.
but there can be a third stock exchange. We don't know, but there are only two. Entire market is shared between these two.
Got it.
I mean, there's a
Yeah.
concept called moat.
Hmm.
Moat means competitive advantage,
Hmm.
right?
Yeah.
So, new players to come in is very, very difficult.
Okay. Got
It's
it.
called moat.
Hmm.
The Apple moat is very, very huge.
Hmm.
There cannot be a new Apple. There cannot be a new Google.
Hmm.
Zomato also has a huge moat because of the scale, because of the technology, because of the customer base, because of the number of the restaurants on that.
Got
Can we create somebody in next 1 year, 2 years? Even if you put capital, you cannot create that.
Got it.
So the businesses which have a moat,
Hmm.
moat can come multiple ways. It could be regulatory environment.
Yeah.
You are a liquor brand, spirit brand.
Hmm.
Spirit licensing is not easy,
Got it.
right? But you have acquired that license.
Hmm.
You have demonstrated performance. You can keep growing.
Got it. And sir, when you told about Zomato, right, it was an interesting example for me because I remember back in 2020 when Zepto came into the picture, I could see growers already trying to cater this space. And there were other quick commerce companies trying to do something in this system of quick delivery.
Right.
What was Zepto's moat, or what was so different about the Zepto brothers or the co-founders that it scaled this fast and the other companies were not able to do it?
Yeah. So what is happening today? Tech-based businesses.
Yeah.
They are built on tech as a fundamental strength.
Okay.
If you go and set up a cement manufacturing, sugar production, putting up the road, they requires high capital, high gestation period.
Hmm.
Right? Now, for you to repeat, there are a lot of challenges. But tech-enabled businesses, tech-centric businesses,
Okay.
tech is a differentiator.
Hmm.
Now, what is happening is each category. Now, quick commerce is a category.
Hmm.
Nobody knew what is quick commerce 3 years back,
Yeah.
4 years back. Now we are saying quick commerce as a category.
Yeah.
Big basket, everybody got into quick commerce.
Hmm.
Now what is happening is these companies have to be backed by investors.
Okay.
They need a high growth. They need to acquire lot of customers very early
Hmm.
by losing money.
Okay.
Every order they take from you, they are losing money initially.
Yeah.
Right? But still they wanted to grow. The whole idea was, if I am able to acquire a scale of a customers, once the competition gets away, I can milk from the customers.
Got it. Hmm.
So the investors who will fund, who are the investors who are funding this high growth tech startups or consumer internet companies?
Okay.
They are the private equity funds.
Okay.
Large private equity funds, global in India, called Sequoia, TPG, like there are several of them.
Got it.
Now you should be top 10 companies to get funded.
Okay.
When that theme starts, when quick commerce theme starts, there may be 100, 200 companies all over India getting started. Bangalore, Hyderabad, maybe Pune, NCR and all that. 100 will start,
Yeah.
but 50 will disappear in less than 12 months.
Hmm.
Maybe 20 will get funded.
Got it.
Seed funding.
Got it.
You have to have a seed funding, then the Series A, Series B, Series CD, and all that.
Got it.
And the people, maybe 10 companies will go to Series A, 15 companies. Only 3 to 5 companies will survive, which gets the enough growth capital, they'll compete.
Got it.
So if you are in that 3 to 5, maybe you have a growth opportunity. Rest 100 companies, right, will disappear.
Got it.
Investors are not banking, saying that there is no market for beyond 5 people.
Okay. And our ability to showcase investors that we are the right promoters to execute this, and for every fund, the growth that we show, that gives the success of that company.
Correct.
Makes sense. And sir, when even you told about the point at that time of who are suitable for an IPO, that's an interesting point you made. That is, there are few exceptional companies, and even they are loss making, they can go for an IPO.
Yeah.
And if I have to take a Zomato example only, correct me if I'm wrong.
Right.
The companies which are even loss making and still go to an IPO would be those companies which are also popular, who invest so much on marketing, right?
Yeah. Popular, and they are at a very large scale. Oyo is likely to come for an IPO.
Got it.
Right? Oyo is a large brand, right? And they have raised a lot of capital. Now they have been working in last 2 to 3 years. How do I become profitable? Public market investors do not like loss-making companies.
Okay.
Even if you take Zomato, which went for an IPO around 70 rupees, on the listing they got maybe 50% appreciation, but in 2022 their share price went down to 45 rupees.
Okay.
Public market investors want performance to happen every quarter. Performance means profit.
Got it.
Yeah.
And how can a founder, to be honest, make themselves so ready? Because usually once you are in a scrutiny of a board, a founder has a lot of expectations to take, sir. At the end of the time, there are employees expecting a certain things from the founder, customers expecting a certain thing from the founder, the board expecting it, and now the public also comes. How can the founder make themselves ready for that kind of a pressure?
That is where there is a lot of systems in place. You have the board as a guiding thing. There are several subcommittees. There are several advisors. So that is where the preparation phase.
Got it.
Will take anything between 12 to 24 months for some companies. Maybe it will take more.
Okay.
But only little bit better is for the funded startups. Funded startups, already governance is in place, transparency is in place, because you have a large investor is already questioning, is already putting these kind of systems in place. So your preparedness for an IPO is little incremental.
Got it.
Versus a legacy and family owned businesses.
Got it.
There it requires lot more effort.
Okay. Sir, if I have to ask you, if a founder, like let's say a 26, 27-year-old founder from Hyderabad wants to build a company, has an aspiration to become one of the bigs, how can they make themselves, their organization, this IPO ready, or else to be ready in a spot where their aspiration can be helpful for the whole India to grow together?
Yeah. No, the important thing is at what stage my company is in.
Okay.
Right? We cannot look at the IPO on a zero date.
Okay.
Right? As the company progresses, you are a growth stage company, right? Your business model is delivering value, right? And you see the growth potential. You need more capital. So this the whole thing is transparency.
Got it.
You should be subjected to be scrutiny, and you are open, you are prepared.
Got it.
It helps. Sometimes even in the startups and when they raise initial capital or a Series A, Series B, they are not well prepared. If they prepare well, it becomes easy. Even raising private capital becomes easy for them, because my books are open, highest amount of transparency. I have put the building blocks for a proper governance system.
So, sir, what you told about corporate governance is very interesting. And if I have to take an example, let's take an example of a company which has gotten the Series C and is also very high revenue driven company and has a growth potential also. What kind of corporate governance policy or what kind of corporate governance policies that they have to maintain in their company to grow better? Because I believe what you told initially, that is the founder's mindset is more important. What can be something that they can do so that they have the edge to attract the investors, or else to be in a better position when they get listed in the IPO?
This can be done by multiple ways. Now, one is at a board level, as I said. having the independent directors is mandatory for you go for an IPO. But even before going for an IPO, 2 years before, you can bring the independent directors.
Got it.
This is one piece.
Hmm.
Second, how reliable are your financial statement and financial information, your revenue, your profitability, your cost. How do I rely?
Got it.
There is an auditor who does the audit. But what kind of auditor he is?
Okay.
Does he has an experience of handling listed companies? How is the credibility of that firm? Is it a big four or a large Indian firm who have been associated with several listed companies? Right?
Got it.
So if the books are audited by a particular firm, there is a lot of credibility attached.
Okay.
There is no hierarchy. This is second piece.
Okay.
Right?
Got it.
And then third important is regulatory risk. Whatever business you are doing, you are following all the laws and regulations. You are building a pharma company, running a pharma company. The environmental laws, pollution related, compliances are very, very important.
Got it.
Are you doing that in place? Are you doing enough?
Got it.
Your FDA approval for pharma company. So this is what will be looked at.
Got it. And right now, do you think founders who go for an IPO, should their mindset be too much on the product-driven approach where I'm asking in regards of IPO and also while raising funds. Are those founders valued more who have more of product-driven approach where they care so much about the product, they are the engineers of those products, or else those founders who understands more of the market or business or that sales-driven approach?
I don't know whether there is a one answer for it. Particularly from an IPO context, if the business is centered around one single individual, that is a risk.
Okay.
Right? Somebody brings a business knowledge, somebody brings a commercial knowledge, somebody brings a engineering knowledge. If there is a complementarity, then it will work wonders.
Got it. And in this experience of yours, is there any story of any particular company or an IPO, the journey that you have seen that you felt like, hey, this is a very good example to be taken for any of the companies or founders who consult you? Is there any IPO story like that you would like to share?
And there are several stories, but one or two where I'm also associated. There's a company called MedPlus, right?
Okay.
MedPlus retail pharmacy stores. Okay. And as a professional, I have been involved with this company from the day company was born.
Wow.
Till their IPO. I had a very, very active engagement, right, in the providing the professional service in corporate legal, compliance, all those kind of things. Now, this founder raised money on day one.
Okay.
Day one, he put some money, he brought some investors' money. That's how he started the journey. He knows very, very clearly that for me to succeed and grow, I need to raise external capital on a consistent basis, on a regular intervals. So he designed the organization structure, the commitment to the investors, is available from the day one.
Got it.
He brought in large investors, large private equity funds. Their expectations he knew. He has put in those kind of systems in place, this kind of governance system in place. Then finally they went for an IPO in 2021. Great success story. From zero, from a $500,000 capital, market cap went to 2,000 crores.
Wow.
12,000 crores, close to kind of a 2 billion market cap. I saw this journey very, very closely.
Got it.
Yeah.
And
promoter was very committed for business, committed for a transparency. Yeah.
And sir, I want to end this particular podcast because I believe there will be a lot of promoters and founders who will be watching this.
Right.
And considering you have interacted with a lot of founders themselves, if there is a particular kind of a traits that you see this particular trait if the founder has, or else there must be a growth for sure a founder has to go through. Right. Self-learning is something that is very much necessary. Right. Are there any particular trait that they should inculcate in themselves so that they will be successful in the business? And if you can share a few, it would be very helpful.
Yeah. I think clear focus is very, very important.
Okay.
Focus on what they are doing, how do they want to better it every day, and grow.
Got it.
This is very, very, this and the transparency.
Okay.
Clear focus on business and willing to grow that, going all out to grow that business. Customer.
Got it.
I mean, everything, it comes to the customer. What is your product? What is your, what are you doing for your customer?
Got it.
If you can take care of that and take care of the transparency, I think then, you can, somebody can be ready for a IPO kind of a journey.
Got it. And if you have to say, keeping IPO aside, if you have to say a particular founder has that sense of growth, or else if you can tell me what kind of particular traits a founder should have in themselves so that they can really grow in this business environment, what would those be?
Awareness to the external environment.
Okay.
While you should know lot about your business, but how is external environment is impacting or likely to impact your business.
Okay.
The external environment has become very, very volatile.
Got
So
it.
having, eye on it, how is tariff is going to impact me? How is AI going to impact me? How is deep tech is going to impact me?
Okay.
Got
it.
Yeah.
Got it, sir. I mean, I honestly understood. I mean, it did give me an overview of not just about IPO,
Right.
but also make oneself right to be a founder, because I feel being transparent, being clearly focused, and creating an organization, not just for IPO, it is good for business.
Absolutely.
And now, I mean, I believe in the coming episodes, we can discuss more on the aspects of the process of IPO, because right now we discussed outline,
Correct.
but getting inside the subject would be much more better.
Yeah.
And also, if possible, we can also get few guests and talk to them.
Yes, absolutely.
Yeah. Thanks a lot for doing this, sir. I appreciate it. Thanks for your time.
Yeah, thank you so much.